Hello and welcome. Today, we're going to pull back the curtain on the world of banking. We're going to demystify what really happens behind the scenes when you apply for a loan. It's a process called due diligence, and honestly, it's the key that unlocks the entire world of finance.
Okay, let's dive right in. So, let's say you're applying for a 50 lakh loan, or maybe even a few crores for your business. Ever stop and wonder what's really going on inside the bank's head? It can feel like a total black box, right? Well, in this explainer, we're going to crack that box wide open and show you the crucial steps that decide whether your loan gets a green light or a flat-out no.
And at the very heart of this process is this one core concept: due diligence. Now, don't think of this as just filling out some forms or ticking a few boxes. No way. It's much more like a full-blown detective investigation. The bank is essentially trying to answer one single fundamental question: is this loan safe, and are we going to get our money back?
So, where does this whole investigation kick off? You might think it's all about the balance sheets and profit statements, right? Nope. Surprisingly, it starts with the people. The bank's very first move is to understand who is steering the ship: the promoters, the management team, the individuals behind the loan application.
They're going to look at everything: your experience in the industry, your personal net worth, and of course, they are definitely pulling your CBIL report. Now, you might be thinking, hang on, why does my personal financial situation matter for my business loan? Well, here's the thing. Bankers believe that how you handle your own money is a huge indicator of how you'll handle theirs. It all comes down to competence and, just as importantly, integrity.
And this quote right here, it absolutely nails it. It's a fundamental truth in the world of lending. You could have the most brilliant business plan and crores in property to back it up, but if the people leading the charge are unreliable, that is the single biggest risk for a bank. At the end of the day, they're not just lending to a business, they are betting on the people running it.
Okay, so once the bank has a really good handle on the who, they move on to the what. And that's the business itself: the plan, the model, and of course, the numbers. This is where the real deep dive begins.
Right, now the financial detectives really get to work. They're not just glancing at your profit figures. Oh no, they're digging deep into at least 3 years of your financial statements. They want to see the actual cash flow, the real money coming in and going out. Because let's be honest, profit on paper is great, but cash is what actually repays a loan, isn't it? They'll be running all the key ratios and checking your tax returns, essentially giving your business a complete financial health checkup.
And look, the bank isn't just going to take your word for everything. They have this entire toolkit of independent checks to verify all the information. You've got the CBIL report, of course, but then there's something called a SIRS search. This is super important because it checks if a property you're offering as security has already been pledged to another lender. It's a huge fraud prevention tool. For companies, an ROC search does something similar, showing any existing loans. It's all about building that unbiased 360-degree picture.
The investigation so far has been pretty thorough, right? But the bank still needs a safety net. And that brings us to the final, and you could argue one of the most critical pieces of the puzzle: ensuring the loan is legally protected and that the collateral is solid.
And let me tell you, this part is absolutely non-negotiable. The bank's legal team will comb through property documents to make sure the title is crystal clear and undisputed. They'll get their own independent valuations and hunt for any ongoing lawsuits that could put the business at risk. Why? Because it doesn't matter how profitable your company is. If the security they're holding isn't legally enforceable, it's basically worthless to them.
So after all that, once every single check has been cleared, then you get the approval. That's when all the official documents come out: the sanction letter, the mortgage deeds, the guarantee agreements. And this isn't just boring paperwork. Think of it as the bank's legal shield. It's a binding contract that protects their interests and makes sure everyone involved is crystal clear on the terms.
Now, throughout this whole deep dive, what are the things that make an experienced banker's ears perk up? What are those little warning signs, those red flags that tell them, I need to dig a little deeper here?
Well, here are some of the classics. A sudden massive jump in turnover might look fantastic to you, but a banker is immediately going to ask, is this sustainable or is it just a one-time thing? Being too dependent on a single big customer is another huge one. I mean, what happens if you lose that one client? The entire business could be at risk. Now, seeing a red flag doesn't mean it's an automatic no, but you can bet the bank is going to start asking a lot more very pointed questions. So after carefully investigating the people, the plan, and all the legal protections, the bank finally arrives at its decision. This whole process is a complete 360-degree evaluation.
But what's the ultimate goal of all this work? What's the final verdict really all about?
And this quote just says it all, doesn't it? A good loan isn't one that just gets approved, it's one that gets fully repaid, on time, with interest. So you see, due diligence isn't about the bank trying to find reasons to say no. It's the exact opposite. It's about building enough confidence to say yes to a loan that's safe, secure, and sustainable for everyone involved, for you and for them. And before we wrap up, just a quick but really important note. What we've talked about today is for general, informational, and educational purposes only. It is not legal or financial advice. Every single situation is unique, so please always talk to qualified professionals for advice that's tailored to you. We really hope this has helped to demystify the loan sanctioning process for you.